So, so the topic is long-term investment, buying the dips. When the markets are falling, a lot of my friends they feel that they want to enter the market when the stocks are available at cheaper prices. So there are few basic things that we need to look at when we are doing this. The first thing is whatever stock you select, you need to know a story behind it. By story, what I mean is the sector it is in. Is the sector generally preferred in the market for investment? Like some standard sectors are banking, IT, fertilizers, power, metal, FMCG, and pharma or financials like that. Second thing we need to know about the management. If the management is good, it is reliable, what kind of track record they have. And the third thing is balance sheet. If the balance sheet is clean or not, do they have a reasonable level of debt to equity ratio? Means it should be sustainable. It shouldn't be laden with a lot of debt. Once that story part is understood, the second thing to understand is the valuation part, that if it is really cheap that we think, or it has fallen but it is still expensive. So how valuation of a stock is done is there's a thing called price to equity ratio, and it is derived from the quarterly results that are available with the exchanges. So where do we get to see the PE ratio? So I found source is one source is Economic Times. Money Control also has, but uh, they have kept it on a chargeable basis. But on Economic Times, I could find it easily. So let's look at the P value of some of the banking stocks first. So State Bank of India, you click on go to Economic Times, search State Bank of India, and you'll get. So this is the app of Economic Times, and this is how it looks. So here you have an overview. You just scroll down, and here are key metrics. In key metrics, the first thing you see is PE ratio. So here it is showing 11x is the PE that SBI has at this current price of 445. Okay, now how do you know if 11x is cheap or it is costly? So you have to compare it with other banking stocks. So let's go to HDFC Bank. So it is at 1300 and the P ratio is at 19. So it is commanding 19x and SBI was commanding 11. So now let's check ICICI Bank. So ICICI Bank PE ratio is again close to what HDFC has, it is 18, and SBI is available at 11. So comparative to ICICI Bank and HDFC Bank, SBI Bank is available at a cheaper valuation. Okay, this is how you come to know the valuation part, what is cheap and what is costly. P ratio means price to earning. It means whatever the quarterly result, whatever the profit was there last quarter or before quarter, and divided by the uh, market cap. So market cap divided by the profit would be your P ratio, something like that. So let's check for Yes Bank. At 12 rupees, Yes Bank is commanding right now, it is having 29 PE. It means it is so costly. It is even costlier than good banks like ICICI Bank, HDFC Bank, and SBI Bank. So now you'll ask me, how is it that something is very costly and something is very cheap in the same market, in the same sector? So the thing is, if the market believes that there will be a growth going forward in the coming quarters, coming 2 3 years, there will be growth. So it tends to give a higher valuation to the stock. So Yes Bank is costly right now. market is already factoring in a good growth, but if the growth doesn't come, it is likely to get punished. Having said that, I'm not saying that you should buy costly stocks because market says that it will have good growth. It is, you have to understand the concept that P ratio is something which is telling you the valuation is costly or cheap. The reason behind it can be sometimes different for different stocks. Now let's check some names from IT space. Let's take TCS. Now it's a whole together different sector. So here P ratio for sector is different. Here you see the P ratio is 32. Okay, and let's check with Infosys. So at current market price 1489, the PE ratio is 28. So Infosys is slightly cheaper as such. Let's take other names like LTTS, L&T Technology Services. Here the P ratio is 37. So approximately what TCS had. Now let's look at Tata Elxsi. Quite a hot name. And like Tata Elxsi. Okay. So it has been, so the P ratio right now is 92. So this tells you that if you enter Tata Elxsi right now, it's very high costly valuation you are entering at. So the safety of margin, the comfort is not there. Okay, that's what the thing is. Now let's look at Bajaj Auto, or it's Bajaj Finance, even that is a good name. Once let's have a look at it. 48. So it's a premium brand. It definitely commands a premium valuation all the time. It's one of the leaders in that space. Let's look at Bajaj Auto. So Bajaj Auto is available at 17x, which I think is reasonable. For long term, it is reasonable. Let's look at iShare. 42. So compared to Bajaj Auto, iShare is trading at quite a lot of premium. But that's how it is positioned. It has a unique proposition. Their market share in the sector they operate is very high, and they definitely don't have competition in 350cc and 600cc bikes. So that is the reason it always does command some premium valuation. Let's look at Hero Moto. 21. So very close to Bajaj. Now let's look at some of the steel pack names, metal names. So let's look at Tata Motors. Quite interesting because it is quite a darling stock. Minus 11. Why? Because the company has been reporting consecutive losses quarterly basis. So for me, it's a strict no to enter into this. But then everyone has their own understanding. There is a story aspect to it, and depending on that, a lot of people prefer to get into riskier things. Now let's look at Tanla, one stock which has created a lot of wealth. Tanla Platforms 30p, still very good valuation, not at all very high, means it still has a lot of room. Another platform company, Affle, 81, high valuation. So let's look at Happiest Mind. So new age company, expertise in big data and all. 74, very high valuation. So that's the thing. Let's look at Nazara. So Nazara is in gaming, so I don't know any other company which is in that sector. But the P is 155. Now think it is so costly to enter into Nazara, even at this present valuation, even though it has fallen from 2800 odd, but it is still very high valuation, not at all comfortable at this stage. And Root Mobile, 58, still reasonable but costly. Let's look at BPCL, 3.8. So see, sometimes a lot of good companies have very cheap valuation. The reason is they're dealing with commodities, like BPCL is dealing with petrol. So that's how it is. I don't know why it is so cheap, but let's look at another one. IOC 4. So that's how it's going to be. That's a sector that is doing. Let's look at Reliance. So Reliance at 27 looks good to me for such a good name. Let's look at Adani. Adani. Adani, I suppose, are very costly. Let's look at Adani total 550. Don't ever think of entering this one. Adani Trans. That's a stock that I generally liked, but let's look at after creating a lot of wealth, what is the situation? 205. So better stay away from Adani name if at these prices if you want to. Adani Power. 20. Okay, at least this one is reasonably cheap. Let's look at Tata Power also. 226 and 41p. So Adani is cheaper. Let's look at Torrent Power. It's quite a stable name as such in power. 45. Okay. So that's how you look at it, and that's how the valuation aspect is found. I hope it helps next time you're trying to make an investment.